forget about as an investor. As a human, you don't want to drive around and see a bunch of empty malls in your area. They're eyesores. They're bad for property values. But I took away a pretty grim outlook for retail real estate based on that note. How bad is it?
Well, I think it's pretty bad, although in some respects it might actually be better than what is currently priced in the market. So, talking to our CNBS team, for example, they think that up to 30% of the mall loans that they look at right now are already in some sort of delinquency or default. So if we think that, say, 15 to 17% of those are going to go away and be redeveloped into something else, it might actually be an improvement over where things are being priced right now.
Yeah, and you said CMBS for our audience, by the way, who may not know, it's collateralized mortgage-backed securities. It kind of harkens us back to 2000 and 2007 and 2008, getting these acronyms back in business. This is a gigantic market that, as I understand it, Ryan, has grown considerably the last couple of years with new issuances. How much money ultimately may be at risk here?
So, it's not my area. I'm not going to put a specific number on that. But I think if we're talking about malls here, if you think that the U.S. has something like 1,100, maybe 1,200 malls, we could be talking about 200 malls closing across the country if our forecasts and models correct.
200 malls across the country, so not quite 1/5. And then what's the ripple effect, Ryan, of a mall closing? When stores close, anchor tenants in a mall, it often gives other stores the ability to break their lease because you have these co-tenancy contract clauses, et cetera. What's the trickle down effect if this happens?
Well, I think the first thing that we've seen, going back to that anchor store question, is that when an anchor leaves, you see the traffic in a mall drop by about 10%. So that is a pretty big hit to malls right there. And what that does is it tends to tip off potentially a little bit of a tipping point for malls. So what we've seen in doing this research is that once malls cross about 20% vacancies, they start to get into the place where they're at risk for actually tipping over into this default. Then, once a mall closes, the question is, what can it become? And I think there's a few things that people have done with malls recently. They can turn them into multi-use developments. They could just turn them into regular neighborhoods. But the thing that's gotten a lot of attention, I think, has been turning them into warehouses for e-commerce companies.
Which sounds nice. So if I'm a Simon Property Group, and I'm not picking on them, I'm just saying they're probably the most well-known stock. If I'm a Simon or another mall developer, the good news is I can probably turn that empty JCPenney or whatever it is into a warehouse. The bad news is that my valuations are going to drop considerably whatever else I do that's not straight retail, correct?
Yeah, I think that's right. So in our look at the data, it looks like the drop in value is about 60% versus what its use was as a retail space. So that's a pretty big hit right there. I think the other thing that complicates that is it's a limit basically to how much of that space really needs to be turned into e-commerce warehouses. The issue here is that Amazon, in terms of generating dollars per square foot, is much more efficient than a retail space. And so even if you just sort of swap dollar for sales, you only need about 15% of that space to be turned into warehouses in terms of what's going to potentially close.
Shepard Smith here. Thanks for watching CNBC on YouTube.